Happy Monday, everybody. Today is July 14th, 2025. Welcome to your Monday market update. Here's what moved the markets during the week of July 7th through July 11th and what we're watching in the days ahead. On Monday, stocks opened the week down as global trade concerns resurfaced in force. President Trump unveiled a sweeping set of new tariff proposals targeting 14 countries, including key partners such as Japan, South Korea, Malaysia, with levies ranging from 25 to 40%, set to begin August 1. The broad nature of the tariffs and their clear alignment with the administration's escalating stance towards the BRICS, the aligned economies, shook investor confidence early. If you're wondering why markets are tending to ignore this, maybe note that today's news, for when I recap today for the next week's video, pretty much the same news. Will markets act the same way? We'll just have to see. Markets gapped down at the open, weighed by speculation about retaliatory measures and potential economic fallout. Mid-morning, comments from Treasury Secretary Bessent on CNBC gave additional detail about tariff implementation timeline, adding fuel to the fire. By late afternoon, sentiment improved slightly. Positive headline about a possible U.S.-EU auto trade deal combined with the White House clarification that tariffs are not going to be stacked did calm some nerves. That helped the S&P 500 hold technical support at that 6,200 level, and it sparked a mild dip buying rally into the close. The Dow closed down 1%, S&P down 0.75%, and the Nasdaq was down about 0.5%. Tuesday brought a tug of war between improving inflation expectations and worsening trade threats. Stocks opened modestly higher after the NFIB Small Business Optimism Index, remember I talked about that last week, came in above expectations, a sign that Main Street sentiment, while fragile, has not collapsed. But that optimism was quickly tested. Amazon's Prime Day sales were reported down 14% year over year in early tracking, sparking concern about consumer demand. Wonder why? This is what I'm thinking. Could it be that now there's 4 days and not 1 day of Prime Day? Spread the buying? We'll see. We'll see how things end up. Meanwhile, President Trump made headlines mid-session by abruptly announcing a 50% tariff on copper imports effective immediately, a move that sent copper futures soaring nearly 10% all-time highs. The sharp rally in industrial metals did raise concern about the supply chain cost pressures and inflation pass-throughs. While the New York Fed's June consumer inflation expectations fell from 3.2% to 3.0%, a dovish signal. Markets couldn't hold on to early gains. A late-day shift in tone from the president, including fresh criticism of Fed Chair Powell, and a warning that tariff rates could go higher, pushed stocks lower into the close. The Dow was down just about 0.5%. The S&P was down less than 0.1%, and the Nasdaq was up less than 0.25%. Wednesday was a good day for the bulls. Equities surged higher on the back of big tech strength, with Nvidia breaking headlines as the first company to reach the $4 trillion market cap, thanks in part to news that its AI platform Perplexity is launching a browser aimed at challenging Google Chrome. Markets opened strong and kept climbing through the morning. Hopes for a breakthrough U.S.-EU trade deal circulated and helped override anxiety over another round of aggressive trade threats, including a new 50% tariff on Brazilian imports. The Atlantic Fed GDP Now index held steady at 2.58% to be exact, suggesting growth remains intact. Even a flurry of Trump posts attacking Fed Chair Powell again and demanding immediate rate cuts couldn't derail the rally. Treasury yields dipped following a solid 10-year auction in the Fed's FOMC minutes, while not game-changing, were interpreted as not hawkish, allowing risk appetites to stay elevated. By the day's end, the S&P 500 was within 15 points of its all-time high. Dow was up 0.5%, S&P up 0.5%, and the Nasdaq was up 0.75%. Markets extended their rally on Thursday, pushing into new all-time highs intraday as a trio, easy for you to say, dovish Fed heads helped calm concerns over economic headwinds. The session started on shaky footing. Overnight headlines revealed that new 50% tariff on Brazilian imports and a more combative stance towards China. Early jobless claims came in slightly better than expected, but continuing claims rose to a 4-year high, suggesting unemployed workers are still finding it harder to land jobs. The real boost came midday when Fed Governor Waller said current interest rates are restrictive, and he hinted at a July rate cut was still on the table. That dovetailed with comments from San Francisco Fed President Daly, who reaffirmed her view that 2 cuts this year remain likely. Investor optimism was also reinforced by President Trump, praising big tech and Bitcoin in the afternoon speech, boasting about the 47% rally in Nvidia since the Trump tariff policy was announced. taking credit. The market gave back some of its gains in the final minutes, but the tone remained constructive. The Dow was up 0.5%, S&P up 0.25%, and the Nasdaq was up 0.5% as well. After 4 volatile sessions, Friday saw a modest pullback as investors digested the week's whiplash of headlines. The early tone was defensive, following the new threats from President Trump, including a proposed baseline tariff of 15 to 20% on all imports and a fresh 35% tariff on Canadian non-USMCA goods. Now, perhaps more notably, tensions between the White House and the Fed escalated further, and the Office of Management and Budget opening an investigation into the cost of Fed building renovations. Symbolic jab at that underscored growing distrust. That is something we'll continue to watch. There were no major economic reports on Friday, and with earnings season set to kick off this week, traders mostly took some risk off the table heading into the weekend. The Dow was down 0.5%, S&P down 1/3%, and the Nasdaq was down almost 1/4%. Friday's moves did take all of the averages into the red for the week. The Dow was down 1%, S&P down 1/3%, and the Nasdaq was down about 0.1%. This week will be something, at least by most measures. On the eco data side, we will get inflation report that could determine what the rest of the summer looks like. That's tomorrow. CPI release is the main event. Core CPI is expected to rise 0.3% for the month and 2.9% year over year, up from 2.8%. Markets are hoping for a cooler number to reinforce expectations of a September rate cut, though any surprise to the upside could rattle both stocks and bonds. We'll get PPI on Wednesday, and there is added attention to this. Most of the tariff costs will hit the producers first, most believe, but nothing from them yet we haven't seen. Thursday's retail sales will give insight into the health of the consumer. Core retail sales are expected to rise by 0.4%, aided by the Juneteenth holiday spending, while headline retail sales may come in flat due to weak auto activity. This number will be super important. Remember that Prime Day comment from before. This won't have that in there since this is the June report, but it will be watched. Fed heads take center stage, include Williams, Waller, Collins, and Daly. Markets will be hanging on every word to determine whether July is truly live or if September remains that more realistic policy pivot. I remain in the camp that nothing will come in July. The eco data alone will not be enough to shake things up. Earnings season starts, and always with the banks. JP Morgan, Citi, and Wells Fargo all report on Friday. Their commentary on loan demand, deposit behavior, and credit quality could be just as impactful as any other data release. Now, please pay attention. 73 companies of the S&P 500 will report in the next 3 weeks. This week is backed and loaded with the banks, but they will come fast in the coming 21 days. We'll get some housing data and some jobs data too, add in sentiment from University of Michigan, and it will be an interesting week. By the way, recall, markets are all-time highs. Where do you think that sentiment's going to come in? And if you think all of that is enough, never fear. Truth Social and White House press pool is still around, and in the short term, they have been moving markets the most. It was a roller coaster week, new highs, new tariffs, and new tension between the Fed and the White House all collided on a volatile 5-day stretch. But despite it all, stocks remain near record levels, supported by AI optimism, rate cut hopes, and surprisingly resilient earnings expectation. But make no mistake, markets are now priced for something close to perfection. A hot CPI or a weak retail number could tip sentiment quickly. This is a market balanced on a knife's edge between Goldilocks and whiplash. For now, have a great week and come back on Friday for some more planning thoughts. Have a great week.